Good afternoon, traders. Today is Friday, April 28th, approximately 2 p.m. Eastern Standard Time. And you can see I'm ready for the weekend. I've got my floral on here, ready to get started. But before I do that, I just wanted to recapture some of the points that I've made this week and actually all along the last several weeks regarding my sentiment, especially in the crypto market, but also in the U.S. stock market. We'll start here quickly with the dollar. The dollar really has presented nothing new except for, I'm going to circle this real quick, this bearish shooting star candle. All right. So previously I had my little black arrow down here. I expected a bounce off of this neckline for this larger forming head and shoulders pattern. I wanted to see us come up and retest this 50-day moving average here before we descended further down. I haven't quite done that yet, and honestly at this point I'm even doubting whether the dollar has enough bullishness in it to do that. Dollar looking very, very weak, and we may just continue to slide down the rails of this red descending trend line back to our neckline here. And this neckline not only forms this larger pattern, head and shoulders pattern, which spells disaster for the dollar, but this trend line comes all the way back from 1984. It is very significant. Should we fall below this, it's bye-bye dollar. So we have to watch this very closely because, again, if the dollar continues to decline, that weakness in the dollar means that more dollars have to be printed to make up for the weakness. And that is essentially what the Fed has already indicated. I know they haven't pivoted or paused on rates, but they have promised these large banks that are failing depositor money. All right, they have guaranteed that, and that essentially turns the printer back on, making the dollar weaker because more dollars in essence are in the macroeconomic environment. These more dollars make the price of stocks look higher or look more valuable than they actually are. The market will price in that weakness on the dollar. So when the dollar drops and the VIX drops, the market generally goes higher. And we know this from past history. So right now with the dollar being weak, that is a contraindicator to my currently bearish sentiment. And so it's something we have to watch closely. It could be that we come back down and test either the top side of this red trend line one more time, or even this support on our head and shoulders pattern before we bounce and jump up and hit that 50-day. So it could be a little bit more time here. Let's see if we can traverse through some of these other charts to figure out what's going on. The VIX is at the bottom of this bullish wedge, but we've already broken to the top side, and then we formed another bullish wedge. We broke to the top side of that, all right, and we broke out of that, in fact, and hit our level at 1944, back down to support here at the bottom of this descending wedge. We'll see if that holds. I'm expecting it to hold. If we break to the downside of that, fear is getting lower and lower, and so is the dollar. When the dollar plus the VIX go lower, it means the market goes higher. Almost always is true. Let's look at our US 500 to see if that is correct. And yes, you can see that the SPY is coming up again to test the macro uptrend. So we've hit our heads on that quite a few times these past few weeks. 1, 2, 3, 4, 5, 6, 7 times on the daily. It looks like we're going to try to test that again. And if we break to the upside of that macro uptrend, that is not a healthy sign in the long term for the economy. What I really want to see us do is I really want to see us come back down to test this 200-day moving average, which I'm hoping at some point intersects with the bottom of this hypothesized channel that I've drawn. Now, that's just something that I drew there because I do believe we are on our way to a blow-off top. I've said this for at least half a year now. I think maybe up almost 8 months I have been preaching this blow-off top is coming. And yes, I still believe it's coming. The question really becomes at this point, are we going to come back down here and have a healthy pullback to retest the top side of this 200-day moving average? Or are we going to just continue to go up, up, up? If that is the case, the downside will be very harsh in the future. So we have to watch this closely, but everything is lining up. Dollar weak, VIX is down, and therefore the market is up. Once we hit our heads on this macro uptrend again, the question becomes, do we then come back down to look to retest this 200-day moving average? I sure hope so, guys. That would be better long-term than not testing it at all. Okay. On to Bitcoin. Bitcoin, again, I don't know. All these analysts on TradingView and even the Moon Boys have kind of come back out on YouTube. I don't see it. I still expect a neckline retest at least. What is this neckline from? This cup and handle pattern. We broke to the top side. I have never come back to retest it. And I have been saying for the last month that we should come back to retest the neckline. So far that hasn't happened. But now all the bulls are out and saying we're going, to 40,000, etc., etc. I don't think the time is just yet, guys. And there are several reasons for this. But the biggest is we haven't formed a new pivot high. Every high that we get is just a lower high. So this confirms that the trend is to the downside, and we're on the underside of this trend line right now, and we're into major resistance, this orange area here. So do the bulls have enough strength to push us through? I don't see it, guys. I don't see it. I think we're coming back down to at least 25,200 to retest that, and it's possible that we come all the way back down to our 200-day moving average or that $20,000 mark before we continue onwards and upwards. So be very careful here. If you're making trades, my best guess is that your probability lies to the downside. So go short here rather than long. Bitcoin dominance is kind of confirming the same thing. Rarely in the last 2 years have we entered into this orange area that we are currently in. All right, since 2000 and May of 21, so that's over 2 years or almost 2 years now, we've only entered the orange area once, twice, 3 times here just barely, and now currently a 4th time if you count both of these as one. All right, so, and again, you can see this descending trend in terms of dominance. In fact, you could argue that this is forming a head and shoulders pattern of some sort here, and this being the neckline would take us down to retest the top side of one of these descending trend lines. All right, is that good for the altcoin market? It could be, but generally in a bear market, which there's no confirmation that we actually exited a bear market yet, not till we get to the top side of that $30,000 mark. All right, once we get to the top side of that, that would be our first confirmation that we are entering into a bull market. But there's no confirmation yet that we have actually exited a bear market. And so in a bear market, when Bitcoin leads to the downside, alts tend to exaggerate it. So even though that this dominance chart is showing Bitcoin coming down, doesn't necessarily mean that alts are going to go up. It just might mean that alts don't descend as rapidly as Bitcoin in this case, but they still descend. All right, does that make sense? Let's look at the total 2 chart, which is our altcoin market cap, excluding, of course, Bitcoin, because Bitcoin is not the altcoin, but including Ethereum. And you can see I have this nice bullish Adam and Eve pattern drawn. We have not skirted the neckline to the upside of this pattern. And right now, we're actually down below a major resistance area. See this orange square here? And below the 50-day right now as I'm making the video. And not only that, this is a big old bear flag. Once again, I see us continuing to come down, plummet down, possibly testing that 200-day moving average before we continue to proceed upwards. All right. No difference on Ethereum. Same thing. Bear flag. I expect us to retest this neckline of this inverse head and shoulders pattern. It's just like Bitcoin here. Bitcoin had a cup and handle. Ethereum has an inverse head and shoulders. We have not yet retested adequately this neckline. I still think we come down and retest that neckline. And guys, I'm going to make this quicker here. All the altcoins are pretty much showing the same thing. ARB shows a bear flag. All right. I really want to see us enter this entry area. That's where I said I'm going to get in. Now, we did week down, but that was too quick for me to enter. I want to see a good accumulation period in this entry area. Once we see adequate formation of candles on the daily, that signifies good support. That signifies that is an accumulation area, and that's where I would want to enter into ARB. Matic is interesting because we have this, see this May 2021 trend line, this black trend line that's over or almost a year now, and we're really pressuring that support. If that support breaks, we lost it once, and you can see I drew it here with these wick downs. But then we regained it again, and now we're pressuring it to the downside. We're sitting exactly on it right now, this May 2021 support. And that is trouble for Matic. If we come down, we'll probably come all the way to at least 87 cents, possibly down to the 75-cent area. All right, so watch this closely. But again, I would, if I was entering long here, I wouldn't start entering till we hit the 87-cent area. Unless, and big unless, things turn around and this support holds and the crypto / altcoin market takes a turn to the upside. So far, there's nothing here that is proving to me that that is happening. Another bear flag on Dogecoin. We're under the underside of this descending trend line, underside of the 200-day, flirting with the underside of the 50-day. I believe we're probably going to go down, at least retest the 7 cents area, possibly all the way back down here to 5.5-ish cents, the bottom side of this triangle, before we break to the upside of this long-standing, multi-year bullish triangle. Polka dot, don't really have much drawn here except for levels, and we're on the downside of the 50 and 200-day and forming a bear flag. Again, bear flag right here. All right. I would say $5 would be 5.10 would be a good area to consider dollar cost averaging in on the long side. XRP, all right. My target for re-entry has always been 42 cents. You guys know this. You followed me on many trades on this. We have, what, 6 or 7 winning trades. Our biggest being entry here at around 36 cents and holding here to 50 cents. All right, almost what was the percentage on that trade? Well, I sold a little bit here at this level here, 46 cents. I sold a little bit here on that trade at 46 cents, held a little bit up to 50 cents, but we did very good on all of our last 6 trades. They've all been wins. And I will not re-enter this until we come back down to that target re-entry area of 42 cents. Looks like we're going to do that. That is a bear flag. And we have an M pattern here. Lots of signs showing us that we're coming back down to that 42 cents area. So hold patient on that one. LTC is our strong altcoin right now. Now, it is forming also a bear flag, and we're testing that 50-day. I would not re-enter till we retested that 200-day moving average. But LTC is a nice, strong altcoin to look to enter in. Once we get to the underside of that 50-day, and somewhere in this area here, that's where I'd look to dollar cost average in for a long entry. But not until then, or until the bulls actually prove that they are turning this thing. They haven't done so yet. This is all weakness. Solana, I'm expecting us to come back down here, test the top side of this descending line. What is that line? That is a neckline from an inverse head and shoulders pattern. And again, we have not come down and retest that yet. So somewhere down in this area, I would expect Solana to go. And that's where I look to enter a long trade. Does this all make sense to you guys? I'm pretty bearish here, right? Algo is kind of a weird one. That's sort of a bear flag, I guess, but that is also maybe on the 4-hour that looks like a descending wedge. I'm not sure. I haven't zoomed into the 4-hour. Ish. Not really, but Algo maybe not as weak as the rest of them right now at this moment in time. Trying to get rid of that line that I drew, but I would expect us to at least come down to 16.5 cents and retest that before we break above this descending trend line, which we've done once. Algo is kind of tricky. On the bottom side of that 16.5 cents, that would go lower than we've ever been. And we could come back down. Actually, I should say this. We should, from a technical sound point of view, come back down and test the top side of this descending wedge. But that's way down at 5 cents, and that's kind of scary. That's one of my long holdings, and so I don't like to say that or see that. But from a technical perspective, that is probably more precise. ADA, same thing, bear flag, underside of this resistance, which is a neckline for an inverse head and shoulders pattern, have not broken to the top side yet. I expect us to retest this 200-day moving average. All right, you guys get the picture. I'm not going to go through all of these. Ape, same thing. Audio, same thing. Jasmy, I have been doing for my followers simply because a lot of you started following me because I started tracking Jasmy. And we made many, many good trades back in the old days when this thing was popping to 36 cents. But let me just show you quickly what I see on this. Right now, there is a larger forming cup and handle pattern. All right, so that's one pattern I see, with these two red lines being the neckline. All right, when we break to the top side of those two red lines, we're going to 1 penny easy. The other thing I see zooming in here is a little bit of an inverse head and shoulders pattern, just like we see on a lot of the other altcoin charts. Again, testing that neckline. Will we break it right away? Generally not, especially in what I consider still to be a bear market. If not, which this candle is currently showing, that is a shooting star, then we come back down and probably retest that 200-day moving average. An entry there would be a remarkable entry for a long, because if we are truly going to a penny like this chart shows, you're looking at more than doubling your money. That's 150% profit in Jasmy if it pans out the way that the chart is showing. So there's your Jasmy analysis. And with that, I'm at 20 minutes, y'all. So I got to get out of here. You guys have a great weekend. Don't forget to comment, like, subscribe. anything you can to promote this information if you find it helpful. Until the next video, peace, y'all.